Hi there, welcome to Kneppy Invest and welcome to another ASX Daily Rundown video. I am recording this video a little bit earlier in terms of the market closing than I usually do. So the market still has about 50 minutes to go. In fact, 47 minutes plus 10 minutes in the closing auction, so just under 1 hour to go. But I just prefer recording these videos at about 3 p.m. local time instead of 4 p.m. because it gives me a little bit more time to do stuff in the late afternoon, early evening that I also like to do that are not investing involved. Anyway, so I probably will do this more often, record these videos at 3 p.m. And then once we go back in daylight saving in October, back to normal, and I can record these videos when the market is actually closing. And just based off how the market has performed today, it's been a okay day. Everything looks like it's up. Mining's had a pretty good day today. But before we have a look at what has happened on the ASX today, I'll just go through the agenda. So I do have a few companies to talk about in regards to announcements. And I mentioned yesterday was pretty boring. Today was pretty boring as well. Nothing much to mention. So I did find 5 announcements that did trigger a little bit of a response in me. So we're talking about Immuron, Forrestania Resources, FRS. Nyrada released their Appendix 4C, and we'll have a look at that. And I'll tell you why when I open up this type of Appendix 4C, I don't linger on it all that much. In fact, I typically open up these types of Appendix 4Cs and almost immediately close them, and I'll show you why. Somnomed are back to trading. They had a significant capital raising, and that was at a pretty big discount. And then we'll discuss Dubber, which has been in the news recently a fair bit because of some shenanigans with the CEO, and he's been sacked, if I remember correctly. And they've released quite a few announcements at about 11:30 a.m. And then we'll have a look at some charts. I'll have a look at the EZZ Life Science chart. That chart looks really good. Something interesting is happening there. I am a shareholder. Prophecy, I'm a shareholder of that company as well. Chart looks absolutely brilliant. And then we'll also have a look at MLX. And one thing I did notice in the morning was tin. Tin's just been going off, and MLX is a tin company, I believe. I'm pretty sure MLX is a tin company. I've been pretty high on MLX, and I almost took a position up 7% today. Yeah, tin and copper mines. There we go. And look at the chart. You can just see this line chart here. Looks really good. It broke out just below 35 cents. It pulled back to about 33 cents, and almost bought some shares at 33 cents in MLX about 2 weeks ago. And since then, the share price has now rallied about 33%. So I won't say shame on me. Won't say I am regretting that decision, but it's a learning experience. Another thing I'm going to do today is talk about some things, other things I'm looking at, including the Sahm. I think it's called the Sahm rule. Here it is. Here it is, Sahm rule. Where is it? Sahm rule. And also something I'm researching in regards to value, momentum, and a combination of value and momentum. And I actually did find a paper and also found a video that actually did mention this paper. And I'll talk about that after we have a look at what happened on the ASX today, which is the 10th of April, 2024. So let's go back to the market index homepage. And I've already mentioned that it has been a good day on the ASX. However, a little bit of weakness in the market in the last few hours. It was up a little bit more than it is now. Small caps only up 0.13%. Tech up a little bit. And resources, again, mining companies had a good day today. So let's have a look at the best performing sectors and indices. Healthcare has had a really good day. So what I'm going to do is not Jumbo. I just want to see how Jumbo is performing because this is a potential buy for me. Potential buy. So I sold out of Cochlear. Sold out of Cochlear yesterday, and I have a really bad feeling share price of Cochlear is up. Maybe I hit the trigger a little bit too soon, just based off that the healthcare sector has performed fairly well today. So let's see. Oh, it's down 0.31%. And that probably shows you there is a little bit of weakness in Cochlear right now. The share price is down, yet the healthcare sector is up. So that seems like that was a good decision. And the share price was higher early in the day. Share price was as high as 324. So the share price was up a fair bit, maybe 2% early in the day. Two other companies that I am trading are Fisher and Paykel. I'm hoping share price is up. Yep, up 2%. And Ramsay Healthcare. Go Ramsay Healthcare. And of course, I am a shareholder of CSL for the long term, and that's up as well. So, and up Ansell. Ansell was another one. I was thinking of trading today, thinking this could be a good, yeah, up 3.3%. So the market really likes this company's acquisition that they made, up a fair bit from when they announced it. Share price rose 6.5% yesterday, up 3.3% today. So good times for healthcare, materials up, real estate had a down day yesterday, up day today, utilities, and every sector's up apart from energy, down a little bit. Financials, so possibly the banks are down. Yeah, banks are down a fair bit today. So that would mean, because the banks are 4 of the 6 biggest companies on the ASX, and the banks had a weak day today, a lot of our heavy lifting was by the mining companies and other big companies. So a lot of portfolios, particularly those who are heavily saturated in banks, probably had a negative day today because banks had a bad day. IT's down. That's interesting. IT's down 0.91%, but the XTX, the All Tech, is up 0.18%. In fact, I didn't have to go all the way up there. It's right here. So there is a little bit of difference between information technology sector and the All Technology indice. I have no idea what are the constituents or what the companies are in the All Tech, because I have opened this link up before in Market Index and they had no companies in it. It didn't tell me any companies. So most of these indices, you open it up, for instance, maybe, well, if you open up the ASX 200 banks, which there are not 200 banks, this should have you, no, it doesn't. I'm pretty sure some of these indices in Market Index will show you what companies are in that particular indice. Here we go, like this, yeah, like this. So maybe not all of them do that. I'm not sure why. But I would love Market Index to have that. When you open out indices, it just gives you all the companies that are in that indice. Yeah, that's one thing I'd love to see. Anyway, and gold had a bad day today. So that's bad news for a few gold companies I am owning right now, but that's okay. And that probably means gold was weak. So I'm right on tin futures here. So tin up 4.5%. And I don't have to go anywhere. I can just go straight here. No, gold's up. So why would gold companies be down? The gold sector, gold indices be down today? It could be just because of currency. So maybe Australian dollar was running hard today or something like that. Not literally running, like running, but maybe there was some currency issues with, not issues, but maybe the Australian dollar rallied or something like that. And even though gold prices are up, that's the reason why the gold sector in Australia has had a bad day, because there's not much volatility in gold today. And I have actually read a few things online, Facebook groups, where people think gold is now at its top, but there's a lot of momentum behind gold. And I want to talk about momentum in a second. And in fact, I might talk about momentum right now, because that's really all I want to talk about when it comes to the ASX today. We'll have a look at some of those announcements in a second, also those charts. But let's have a look at the Sahm rule, which is really interesting. So this was an article I saw. Famed recession indicator is flashing red. This was released actually overnight. Is flashing red even as financial markets price in zero chance of a downturn in the coming year, economist says. This is from David Rosenberg, which I'm pretty sure he is, I won't say a perma bear, but he is fairly bearish, if I remember correctly. And he talks about the Sahm rule. So there's a little, in fact, I'll just zoom in here. Just zoom in. So what you need, I don't know a lot about the Sahm rule, but I do know a little bit about it. I actually have heard the person who created this Sahm rule. Pretty sure she's female. Yeah, Claudia Sahm. Her rule has correctly called every recession since the 1970s. Has to get above 0.5%. And it's a real, I can't tell you what the definition of a Sahm rule is without actually reading it. So the indicator is a 3-month moving average of the unemployment rate less than the lowest 3-month average of the unemployment rate in the past 12 months. So in a way, it's saying an increasing unemployment rate when you look at the last 12 months using a 3-month average of the lowest unemployment rates in that 12-month period. So it's really complicated, but what we're looking for here is 0.5. Now, Somnomed is close to 0.5. In fact, it's been above zero since or start of 2023, according to this. But it's around about 0.3 now, and it's been around about 0.3 now since October last year. So I'm not sure why. In fact, it says here the Somnomed has climbed higher in recent months. Well, a little bit. It's only been 2 months in a row it's climbed. But I want to get that excited about the Sahm rule. So why is the Sahm rule important? Because it does say there, the rule has correctly called every recession since the 1970s. Just 20 basis points away from doing so right now, but it's been 20 basis points for a while. I'm going to go to this website, which is the Economic Research Fred Economic Data. So this is a Sahm rule recession indicator. So it's not what really intrigued me about this, and I'll probably have to move. Oh, that was interesting. Let's go back. And we'll just really expand this. And this goes all the way back to the 1960s. What I actually found really intriguing about this particular graph is you can see these peaks. That's the peak in unemployment, rising unemployment. That's the way I look at it. Rising unemployment is really bad. In fact, if I had to pick one indicator that shows we're in a recession or possibly moving into recession, it's rising unemployment. That's it. If I only had to choose one indicator. And this suggests when the peak in unemployment is right after the end of the recession. So you can see during the what we call it, the COVID-19 financial panic, peak in unemployment was right after that recession. Happened in the GFC right after the peak in recession, or peak in unemployment. That is when, or rising unemployment, I should say. So rising unemployment and starting to fall. So the peak was right the time when the GFC or the recession finished. And we can go back every single time we had exactly the same signal. And during the recessions, you'll notice unemployment rising. Perfect. So what they're looking for here is sort of an acceleration in unemployment rising. That's when you get to 0.5. So this is the definition of an indicator, a beautiful indicator. You'll hear about the bond yields reverting. What do you call it? Whatever they call it. Reverting. There's another word. Inverting. That's the word, not reverting. Inverting. Bond yields inverting. You'll hear about that, but this is another really good indicator. So we're looking at the Sahm rule above 0.5. It's not there yet, so no need to panic. And we're not seeing a significant increase in unemployment right now, not like we saw during all these recessions. You can see a massive increase in recessions or massive increase in unemployment during all these recessions. There might be even, I was going to say there might be a correlation between how high unemployment gets and the length of the recession, but COVID-19 put a stop to that. Anyway, so no need to panic right now when it comes to Sahm rule. Now on to this paper I was reading today, because I'm sort of wanted to understand the relationship between value and momentum. So this is a paper written by Clifford Asness, Tobias, J. Moskowitz, and Peterson, released in the Journal of Finance. This was actually in 2009, the original one. For some reason, this says June 2013, but I'm pretty sure the original one was in 2009. And one of the reasons why I am looking at this sort of research is I am looking at early stages of momentum. That is my whole trading philosophy, or technical analysis philosophy, is I'm looking at changes or shifts in sentiment and shifts in the trend of the share price. So early stages of positive momentum behind the share price. But one of the things I was looking at the other day is there was a couple of possible trades I was making, and then I looked at the valuation of the companies. I went, these companies are already pretty highly valued. I went, is there any sort of relationship between the value and momentum? So will highly valued or overvalued companies tend to move in momentum waves, if that makes sense? Or is there a better correlation or is there a better indication of buying undervalued companies when they start turning, when the sentiment starts turning and the trend starts turning? So I just wanted to see if there was any research on this, and I did find some research. This was a paper. And I also found, interesting enough, I found this little video, about a 20-minute video released in 2009, And the whole reason I watched that video was because I actually mentioned this particular article. And in this particular video, I found it fascinating. So for those who know my technical analysis strategy, one of the strategies is I'm looking for positive financial information released to the market. And if it's positive financial information, then a lot of times you'll see the share price break out, and you'll see sometimes, not all the time, sometimes the share price move in a really good uptrend after that. And this guy, can't even remember who it was, said exactly that. The market is inefficient. And when a company releases an event like positive financial information, the market doesn't view that event straight away because investors, and his reasoning was really interesting. So he said, investors believe in the status quo. And when they get new information, it takes a long time for investors. So investors include retail investors, fund managers, institutions. It takes a while for that status quo to be updated. Hence, when a company releases a profit upgrade, better than expected financial news, it takes a while for that news to filter. And that's why a lot of times you'll see the share price break out and continue in an uptrend for a while. And I have done a little bit of research on this, and that while is between 6 and 9 months. In fact, he said about a year it takes. So a little bit of difference there in our research. He said a year, I said 6 to 9 months. Anyway, so I was just looking to see if there was any relationship between, or if I could improve my performance by including a value, a component in my technical analysis. And this was interesting because it was sort of going down this path, value and momentum everywhere. Now, I'm not going to talk about this whole paper because it's 57 pages long. So I just wanted to look at, and there's all these tables, but there was here it is. This is it. This is all I needed. And it's sideways. Here it is. Here it is. I have to turn it. Whoop, the wrong way. And I have to zoom in. And I'll just move myself across there. So what this is US stocks. Maybe I can just move it. There we go. So this is looking at US stocks, UK stocks, Europe stocks, Japan stocks, and they do other things as well, which I might not touch upon, but I might. And they looked at a period between 1971 and 2009. So we're talking about a 40-year period, almost a 40-year period. And again, this original paper was released in 2009. So what this is looking at is if you just had a value portfolio versus a momentum portfolio and a combination of value and momentum, how would your portfolio have performed in different markets? US stocks, UK stocks, Europe stocks, and Japan stocks, no Australian stocks here. And just by looking at this, yes, value is important. But what's even more important is when you include value to your momentum trading. In fact, it's a significant difference. So momentum outperforms value, and a combination of value and momentum. So buying companies that are undervalued, that are starting to turn up, your trend is starting to move positive, that outperforms the other two by a significant factor. In fact, correlation is fairly good. And it happens in all markets. Happens in UK markets, Europe markets, less of a signal in Japan markets. In fact, Japan markets, it doesn't even work at all. So combination, actually momentum doesn't work, but a combination works. In fact, value works much better, but you can see there's a massive shift in the late 80s. So that's the top, almost, or just before the top of the bubble. Now, really interesting, in the video I was watching, they did say that in the bottom of bear markets, this strategy does not work. It's flipped. So in the bottom of bear markets, it's completely flipped. That's when you want to buy into value. I think that's what he was saying. And momentum doesn't quite as work as well. So value works better, which sort of makes sense. Sort of makes sense at that point in time, because at that point in time, no companies have any good momentum. Momentum is absolutely shot at the bottom of bear markets, but a lot of companies are really good value, and that's the time where you want to play value. So that was also interesting. And I should show you what else they do. They do country indices. So that's probably more applicable for maybe ETFs. Now, again, this was written in 2009, and ETFs weren't as big a thing, nowhere near as big a thing back then. Currencies. So, yeah, country indices works well. although there's not much difference between value and momentum, but combination works really well. Currencies, yeah, combination works best, again. Fixed income and commodities. So in every single one they looked at, a combination of value and momentum works the best. And this sort of vindicates what I'm thinking, that instead of just blindly buying a company because it's breaking out, I should look at the value. So understanding of how to value a company and also understanding of technical analysis could really improve my performance over time. So that's the sort of research I'm doing right now, just improve the performance of my portfolios. All right. So let's have a look at some of the announcements today. I'm not going to go through all these because nothing much was released today. So I'm going to completely miss Kinetico, KYP, third quarter trading update, ongoing SaaS growth. I had a look at it and it didn't really interest me at all. So let's start off with IMC. I did a video on this company because I'd never heard of it. And I just wanted to see, sort of like a company I never knew existed. You can see share price is up 13.6%. So obviously they released something positive today. So let's have a look. And actually, this is the sort of announcement I do like. So Immuron travel sand sales continued strong growth. So Immuron Traveland, so Traveland is for travelers' diarrhea. And there is some sort of relationship between Immuron and the Department of Defense in America. And that actually intrigued me that there is this relationship. So obviously, travelers' diarrhea is an issue in the defense forces. So this is a pretty good update. So financial year to date, sales up 154%. In Australia, up 234%. In USA, up 35%. And so far, they've only received sales of 3.6 million. So it's fairly small, but it is a pretty good increase in sales. The sort of thing you want to see. Unfortunately, the company is not profitable. I'm pretty sure not operating cash flow or free cash flow positive. However, the share price is moving in the right direction today. So let's have a look at the longer term chart for Immuron. Is this a breakout? The whole reason I'm following these companies or doing this process is I'm looking for breakouts, particularly for breakouts of companies that might be undervalued or cheap. Anyway, yeah, there was a potential breakout in this company on the 7th of March. Share price rose 89%. What was that announcement? Let's have a look. 7th of March, Traveland to progress to phase 3 clinical trials in the US. The market absolutely loved that, but a lot of volatility since then. But the share price is trending up. You can see share price rose significantly, fell back, and is starting to rise again. Now, a little bit of selling on the news today, so that's not good, and not massive volume. And I think the breakout for this company happened on the 7th of March, and the time to buy this is when the share price dipped back to below 10 cents. It fell below 10 cents for a brief period, about 4 days, and now is at, what was the share price? 11 cents? 12.5 cents. Yeah, so an interesting announcement from Immuron. The markup of this company is fairly low, $25 million, and I don't think this company is profitable right now, but maybe it's progressing towards that stage. Next company I want to look at is FRS. So instead of actually showing you going to the ComSec page, I'm going to show you this announcement, released at 9 a.m. Forrestania Resources. Let's zoom in on this. Gold samples up to 49 grams per ton gold at Ada and Prospects. Okay, there's one reason why I wanted to show you this particular announcement. The title itself is, apart from the 49 grams per ton, it's the depth of that 49 grams per ton. If that 49 grams per ton were over 100 meter depth, the share price probably would have rose 200,000% today. I'm being a little bit dramatic there, but that would have been a massive fine, probably one of the greatest fines in the history of gold. And I don't remember seeing a depth of that 49 grams per ton, which was interesting to me because typically I do like to see depths. They just mentioned FRO 1540, 49 grams per ton. You probably have to delve a little bit deeper. They do mention some meters here. There's some meters, like 4 meters at 12.8 grams per ton, 16 meters at 2.64, 8 meters at 0.4, So maybe somewhere else in the announcement they do talk about that. Was it 49 grams per ton? Here it is. Approximately 30-meter depth. I don't know. Anyway, I'm not an expert on reading these sort of results. I do know that if you have a really good depth of over 100 meters of gold or whatever commodity it is, that is usually a pretty good. It all depends on the grams per ton or whatever you're looking at. But again, in these sort of announcements, I just defer to the market. Share price up 107%. So obviously these are pretty good results. Well, the market thinks it's good results. The market cap was 2.26 million. So that is also fairly low. So even though the share price is up 100% or over 100%, still the market cap of this company is about 5 million. So I don't usually get excited about these sort of announcements, even though share price is up 100%. The only reason I want to show you this company is because the share price is up over 100%, is up over 100% in one day. So let's have a look at the chart. Is this a breakout Forrestania? No. In fact, if we go back to June 2023, it's not that long ago, like 8-9 months ago. The share price went up a fair bit on one day, almost 100% on this day, and then the share price pulled back and moved back into a long-term downtrend. So even though the share price is up 100% today on huge volume, don't forget that volume, it's not a breakout because the share price was higher not that long ago. In fact, the share price was higher in January and dropped below where the share price is now in late January, early February. So not too exciting in my opinion, the chart, but maybe the announcement is exciting, particularly for those who understand and can understand those type of announcements. Okay, next company I want to talk about is Nyrada, which released their Appendix 4C. I did mention, I will tell you why when I open up these Appendix 4Cs, I open it up and then I close it almost immediately. I'll tell you why. And I knew opening it up that I wasn't going to find anything that was attractive to me and what I'm looking for. So I don't look at all the commentary. I go straight to Appendix 4C. I look at cash receipts. Cash receipts are 0. Immediately close the report. I don't care about anything else in the report. Cash receipts 0. I close it. This is a story stock. That's all Nyrada is. Now, the market has punished Nyrada today, down 19%. Now, it might not be because of the Appendix 4C, because there is a fair bit of volatility in Nyrada right now. They did release something a fair while ago, the 28th of January, where the share price rose 421%. And that's the main reason I have been following Nyrada a little bit, not too closely. And since then, there's been a lot of volatility. And this could be just a part of the volatility. Share price down 19%. A few days ago, the share price was up 22% and then 12% the day after that. So fair bit of volatility. And you might notice that the short-term moving average, this green area, has been acting as a support level for this company. It hit it on the 28th of March and then took off. And that's another thing I'm looking at very closely is whether that short-term, or one of my trading strategies should be waiting for the retracement back to the short-term moving average and then buy on that retracement, particularly if it's been decreasing volume as the share price falls. That is another potential strategy I am thinking about, and I think that could be a fairly potential or potentially pretty good strategy. And I'll talk about that more when we look at Metals X later in the video, when we look at charts. So that's Nyrada. So I'm not that excited about Nyrada. No, it's a story stock, no revenue. Now on to Somnomed. So I did mention Somnomed in yesterday's video. They're doing a significant capital raising, highly dilutive, heavily discounted capital raising, and shares are now trading again because they completed their placement or institutional component of entitlement offer, and the share price was 38 cents. The capital raising was 21 cents. So you would assume the share price of Somnomed to be probably no more than 25 cents and probably no less than 20 cents. Now, the reason I say that is if sometimes when a company does a capital raising at a heavily discounted price, the market might like why the company is raising capital, and you won't see the share price fall all that much. But I don't think this would apply to Somnomed because they also released a trading update, and it was a negative trading update. So I'd probably assume the share price would be around 21 cents. So let's have a look. Oh, it's getting excited here. Somnomed share price is 21 cents, right on. Has traded, actually opened up at 28 cents. So you probably would have wanted to sell out on open, and the share price has been as low as 20 cents today. So yeah, so no shock to see Somnomed share price dropping to where the capital raising price is. And right now, those institutions who bought in at the capital raising going, oh, what have we done? We can't sell these shares at a profit right now. Maybe they weren't allowed to, but they can't do it now. And the chart looks absolutely horrible. This is an ugly, ugly looking chart. And I still can't believe I researched this company alongside Pro Medicus over 10 years ago, because both companies had a fairly similar markup. And I just can't believe I compared these two companies. One company has a markup of $10 billion. The other company has a markup of probably $30 million now. Yeah. Anyway, ugly looking chart compared to that. Compare this chart to Pro Medicus. Yes. Wish I had a time machine. Okay. And the last announcement I'm going to look at is Dubber. And they released some announcements at about 11:36. There it is. Dubber. Appendix 4D and interim financial report. Company update. This will be the announcement I'm going to look at. Half-year results and underwritten $24 million capital raising, a presentation, and then a prospectus. And I don't think any other announcements have been released since then that I like. Let's have a look. Oh, I'll have a look. Before we have a look at Dubber, let's have a look at King River Resources. Their quarterly cash flow report. I'm assuming this is not a producing company. So let's have a look. Nope. Close it immediately. Don't care. Don't care about your activities. So they've separated, King River Resources have separated the activity report and the cash flow report. Thank you, King River Resources person, whoever decided these two announcements should be separated. I love it because I can open up the cash flow report, have us go straight to the cash receipts. It's zero, close it. I don't have to scroll down the announcement. So sometimes when companies combine activities and cash flow report, they put the cash flow down the bottom, and sometimes the activity report could be 20, 30 pages long, and it's just annoying to scroll all the way down to see the cash receipts are zero. Sometimes you can tell, but I'd still like to see that zero or that dash or nothing in there. Anyway, let's have a look at Dubber. So for those who don't know what's been happening with Dubber, let's have a look at some recent announcements for Dubber. They're probably not trading yet, I'd suggest. Yeah, no trading yet, still in suspension. They have to complete this capital raising first with institutions if they're doing it. But let's go back to okay. Okay, so that's, we have to go back a little bit further. Is it the trading halt where we know what happened, or the update on voluntary suspension? Oh, yeah. So the company realized there was money missing, and something like $26 million of money missing. I don't want to look at that one just yet, but that's sort of relevant for what happened. Is it in this one? Let's have a look. Well, maybe it's this one. Yeah, it's this one here. I'm pretty sure. Okay, so there was about $26.6 million that was just missing. The CEO and managing director of the company, Steve McGovern, was suspended because of this. So that money was supposed to be in the trustee, and then for some reason the board or someone went to look for that money. It just wasn't there. So the trustee and or the managing director and CEO was using the money for some other reasons, personal reasons. I don't know. So the company investigated, they suspended Steve McGovern, and then yesterday they announced that he's been dismissed. So it had uncovered, So it had uncovered that company funds, which were supposed to be held by the third-party trustee in a term deposit on behalf of the company, may have been misused by either or both the company's managing director and CEO and the trustee. So they commenced investigations. From the investigations, it is alleged that Mr. McGovern and the trustee were likely involved in the unauthorized use of those funds, including for purposes which were not for the company's benefit. They have not mentioned whether they have recovered these funds. I think they have not recovered the funds just yet. So he has been dismissed, Steve McGovern, And now we can have a look, if I can find it. Yeah, here it is. This financial year 24 update and this capital raising. Okay, so let's have a look at how they're performing. Now, this company has a fair bit of revenue. So revenue guidance reduced. So this is a profit downgrade or revenue downgrade, which is to become expected, you would think. So they've revised revenue down from 45 million to between 38 and 42 million. Company to raise at $24 million at a price, I think it's about 5 cents. So if they're raising $24 million at 5 cents, that means they have to raise about or increase shares on issue by 400 million or so, probably about 500 million or so. Directors participating in capital raising, but I'm pretty sure there's somewhere here in regards to financials. So talking about revenue growth, that's interesting, but they are still bleeding cash. So what was the revenue? 38 million. So direct costs, operating costs, 33 million. Salaries and related expenses were 17.5 million, down a little bit from last year. But I'm looking for any sort of cash burn here. Record a loss of 22 million. Here we are, cash flows. So cash flows of 17 million. Cash outflows using operating expenses were 57% lower at $11 million. Issued 73 million more shares. So yeah, gross margins have improved a little bit, but it looks like they are burning through a lot of cash. Maybe it was in the presentation that I saw some nice tables where it goes through how much cash they were actually burning. So let's just open that up. Yeah, so this will not be good news for Dubber. So they're raising at 5 cents and the share price was 22 cents. Is that right? Maybe I had that completely wrong. Raising at 5 cents and the share price is 22 cents. Maybe they needed a significant discount when because what's been happening with this company. So let's have a look at the presentation, going through all the events. So market cap is $45 million at offer price. I'm pretty sure the offer price was 5 cents. Yeah, 5 cents. It is. Capital raising, $24 million at 5 cents. 77% discount to the last traded price. Yeah, this is a significant discount. So the share price is absolutely going to plunge. Here is the operating cost. Yeah. So revenue, this is where I found the cash outflows. It was this table here I was trying to find. I forgot it was in the presentation. So revenue of 18.7 million in the first half. Operating costs of 33.1 million, which was down from last half year, which means they burned through a lot of cash in this particular half year. So net operating cash outflows of over $11 million. Gross margins up a little bit to 65%, but they're still burning through a lot of cash. Lots and lots of cash. So this is going to be absolutely destructive to the share price when it opens back up. I would be shocked if the share price of Dubber doesn't drop to, yeah, it doesn't drop 75% when it's back to trading. I'm not sure when that trading will begin. More than likely, if they are doing a placement, underwritten, yeah, the shares will be back to trading when the placement has been done or when ASX is satisfied in other areas. Maybe there's some other areas where the ASX want to be satisfied. So if you are a Dubber shareholder, you are going to be absolutely slammed when shares of Dubber are back to trading. Let's have a look at the chart right now. And it's disappointing because there was a shift in sentiment and a shift in trend in the share price just before all these shenanigans. Share price was at a low of just above 10 cents back in August of 2023 and looked like the shares were basing, consolidating, moving sideways. And then we started to see share price rising. Oh, this is very disappointing. And hopefully they can recover that money. Who knows? Who knows? I don't know. Okay. Otherwise, I'm not going to go through the stock scans, the biggest gainers and biggest losers today. Actually, no, I will. So best performing companies. Ooh, tech is now down. Best performing companies, Forrestania, I've already talked about. Nothing else here that I want to discuss. Let's have a look by market cap. Zip's had a good day. Go Zip. Still am holding Zip, but I'm not trading Zip. Novonics had a good day. Vulcan had a good day. Metals X, I'll show you the chart of that in a second. 29 metals, yeah. So still a fair few copper companies in here. I'm hoping my copper company's doing well. Hillgrove, yep, up 5.3%. So copper must still be doing fairly well. Let's have a look at copper. Yep, copper still doing really well. Okay, so an Appen up 15.67%. Go Appen. And let's have a look at the losers today. Carno, what's happening with Carno? In fact, I did open up Carno to have a look, and then I didn't have a look at what's happening. Oh, okay, just gone ex-dividend, maybe. Distribution, maybe a big distribution of, so share price down 31 cents. Let's just open up this to see if it was like a 31 cent. Yeah, 27.6 cents. That's why they've gone ex-dividend today. Okay, so that's not interesting. When a company goes ex-dividend, I don't care. So Somnomed, the worst performing company today, and nothing else here. Nyrada's there as well, but nothing else there that interests me. Let's look by market cap. Veeam down. I was mentioned Veeam, was it yesterday? That the chart looks stunning. So no surprise to see a bit of a profit taking with Veeam, but otherwise, Alice Pearls 15 cents. So nothing else here that's piqued my interest. Now let's have a look at some charts. So a few companies I want to have a look at. Let's have a look at MetalX first. Okay, so yeah, we know Tin has had a good day today. I'm pretty sure I showed you Tin earlier in the video. If I didn't, Tin had a pretty good day today. And this was a potential trade. Share price broke out above 33 cents at the beginning of March, went up to about 38 cents and then pulled back. And I was waiting for this pullback. It tested the breakout level of 33 cents and towards the end of March and then just taken off. This, and you can see the share price moved in to the short-term moving average channel, which is this green shaded area. Touched, at the same time, it touched the breakout level. That should have been the signal for me. I should have been paying close attention because I have been paying attention to metals X, and that should have been a buy trigger. So I should have bought it about 34 cents. Okay, so that's Metal X, a beautiful looking chart. It's looked beautiful in the past. Here it is. I missed Metals X 2 back in late 2020 on this breakout. A beautiful breakout, and I missed it. So there was a really good day on the 17th of December. Share price rose 19% on that day. Share price then went sideways, and as soon as share price got to a short-term moving average channel, it started to go up again. Ugh. Anyway, Metals X, potential trade, particularly if tin keeps going up. And two other companies I want to show you. Keep this fairly short, this chart section. EZZ Life Sciences. Two companies I do own. And this looks pretty good. Potential breakout for EZZ Life Sciences. Share price has really increased from 46 cents at the low 1 month ago to 76 cents. And that was on the back of a positive announcement from the company and some really good volume coming in as well. So don't forget the volume. So out of the last 10 trading days, the volume has been higher than normal in 6 of those. No, 9 trading days. Volume has been higher than normal, than average, and significantly higher than average in 6 of the last 9 trading days. That's a good sign moving forward. And I have been holding this company for a while now. Yeah, for well over a year now, I think. And it was a little bit concerning here. The share price had moved into a bit of a downtrend, but I think the market was just wrong. And I think it's proven the market was wrong. I'm not sure why the market was bearish. And one of the reasons I am holding this company, they're profitable, dividend paying, and they're cheap. Market cap, $30 million for a company that is growing, dividend paying, and profitable. And the last company is Prophecy. Someone has requested me to do a standalone video on Prophecy. And this is another breakout that happened about a month ago. In fact, it happened on the 15th of March, so just under a month ago. Broke out above 68 cents. And look at that chart. Beautiful looking chart. Bit of selling today. Bit of selling. Share price up 4%. Share price as high as 95 cents. But the last time share price was this high was way back in July 2022. So we're almost at a 2-year high for Prophecy. But you can see just in the past, this company has gone through some hype periods. Back in late 2021, share price went from 55 cents to $1.62. So it tripled in a fairly short period of time. That could happen again, but there will be a bit of resistance because there will be shareholders who bought in this period who still want to get out because this is the dog stock. Share price fell after they bought. It's a dog stock. I need to get out. And they're being patient enough to be still holding shares. But maybe some of those shareholders are out. And the other thing I should mention when it comes to prophecy is the volume. Let's have a look at the volume. Some pretty good volume coming in, just compared to the average here. That blue line is the moving average, and it's been higher than normal over the past, well, ever since it started going up, which was the 13th of March, 1 month ago. Anyway, that's all I have for today's video. Hope you've enjoyed it. If you have any thoughts, leave those in the comment section in this video. Any questions, leave in the comment section of this video, and I'll answer those questions in the answer reply video that I will release on Saturday, the 11th, 12th, 13th of April. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.